Good day, ladies and gentlemen. In this video, I'm going to be teaching you a powerful ICT strategy, but I'll be breaking it down to the barest minimum. Okay, the name of this strategy is called silver bullets. Okay, so this is silver bullet strategy. So I'll be breaking it down to the barest minimum for you to actually understand how it works. You actually need three things in order to make this particular strategy work. Okay, so what are the three things you need? The very first thing, there must be a liquidity sweep of some sort. Okay, there must be some liquidity sweep. That's the very first thing you need. So if you don't know what a liquidity sweep is, you would need to go and watch some of my videos where I explain liquidity sweep and stuff like that. So the next thing you need is there should be an MSS, a market structure shift, which is more like a break of structure in the opposite direction of a trend. That means if it's an uptrend, you're expecting a break of structure in a downtrend kind of fashion. Okay, I'm showing you that market wants to start moving downwards, so there should be an MSS. All right, market structure shift. Then the last thing is the displacement leg that caused the market structure shift should have an FVG. So you're entering on the FVG, as simple as that. So that's the first set of things you need. Now something else you also need to pay attention to is timing. Okay, so it works around certain times, and I'll be giving you the timing in New York session. The first session, which is the first AM session, is between 3 a.m. and 4 a.m. Okay, New York time. So this is New York time. All right, 3 a.m. and 4 a.m. New York time. That's the first AM session. The second AM session is between 10 a.m. and 11 a.m. Okay, that's for the second AM session. Then the third session, which is what they call the PM session, that is between 2 p.m. and 3 p.m. Okay, so whatever this time is going to be in your own time zone, you would need to work around that to figure it out. Okay, so for my charts right now, my chart is on GMT plus 0. Okay, so 3 to 4 a.m. that's the first session. 3 to 4 a.m. New York time is going to be 7 a.m. to 8 a.m. for me. Okay, because my chart is on GMT plus 0. Actually, the New York time is GMT minus 4. So I'm trying to give you an idea of how I could work around it. So New York time is GMT minus 4. So since my current chart time is GMT, time zone is GMT plus 0, all I needed to do was to add 4 hours. Okay, so I added 4 hours to 3 a.m. that gives me 7 a.m. Then 4 hours to 4 a.m. that gives me 8 a.m. So my time is going to be 7 a.m. to 8 a.m. Okay, let's dive right into it without further ado. So I've already marked out the 7 a.m. to 8 a.m. Period, which is just a 1 hour period. Something else you also need to know is that this setup, once price comes into the fair value capacity, it has to be activated within that 1 hour. Your setup must form within the 1 hour, and it must also be activated within the 1 hour. So if it's not activated within that period, just take away your pending order and wait for the next session. Okay, so it's not expected of you to wait outside of the session for your trade to get triggered. No, so it should form within the session. It should also get triggered within that same session, but you can hold the trade outside of the session. So that's very important information. All right, so first things first, liquidity sweep. You have already marked out the period. So liquidity sweep, you can see there's a liquidity sweep up there. Next thing, market structure shift to the downside. You can see the set of red candles breaking this low to the downside. Okay, then it left behind a fair value gap. Let me see if I can mark out the fair value gap. So from here to, let me copy that to here, there's a gap in between. So we'll be looking to enter on the fair value gap. You can place your pending order here, place your stop loss above this. In my experience, I've noticed that most times it's going to give you 10 pips. Okay, the trade will give you about 10 pips. So That's what you should be expecting. It doesn't give you much, just about 10 pips. That's what you are going to get, okay? Or you can just target opposing liquidity. Let me zoom out and show you the opposing liquidity. But you can see right here, within that same period, what happened? Price came in and tagged us in and started pushing in the downward direction. So you can target opposing liquidity, which is this. This is the closest opposing liquidity right here, this low. So I expect price to come and take out this low, okay? And you can see that's exactly what happened. So price tapped us in, then cleared this low, but it still went a bit further. So like I told you, in my experience, it's always about 10 pips that will give you. It doesn't give you much. Sometimes it could give you more than that, but it's always about 10 pips. 10 pips is a decent number of pips to target for this move, because you are not going to be using any higher time frame buyers. You can just do this on the 5 minutes time frame. Okay, so if you got any value, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.